Good morning, everybody. So yesterday we had FOMC, and just before this FOMC, we had a little bit of rally inside this area, which looks like which could have been looking like a flag of this ABC, potentially of this daily or big ABC that we have here. You see it there better. So that's what I think many have been looking for. On my side, I was looking more for a top consolidation or something like this, which looks like that is what we have now with the double top. We had yesterday this nice double top with a bearish candle. We go on red today. Now we need to close under this 50% on the weekly at least. If it can be really hard, that would be even better. A very big, nice red candle would be great. If we look at that on the weekly, you see we have been struggling really in this area. We have been spiking up and down, but the big volume is really concentrated in a very, very narrow range, a few percent of this range. So that could be typical of some consolidation before a turn. So that's what we had. So on the FOMC was not really dovish, but it has been too much priced in by the market as a very hawkish statement, which didn't happen, and that's why we had this term. Technically speaking, anyway, we have been calling that, and I have been, as you know, short USD since a long time now, since we started in that area, I think. We didn't touch and back tested this big trend line here, which was what I was expecting in somewhere to see this 61.8 FIB touch on the FOMC. I was expecting if we would have had a bullish reaction of the market, we could have tested that, and then from there would be a nice big collapse of the USD. That's what I was looking for. So we had it a little bit under the area I was calling on the previous video. We had this double top, which is a very nice formation for a potential top. We could see here an M shape that would be forming, and this M shape, if we look at it like this M shape would probably come back to the 93.37 area if we would see something like this. And up, and then we go back here, and from there we could break lower, because then we would have finished the ABC on the upside. We really touched the 38.2 here, which was my original target, but we didn't get it. So I don't think we should go there now. I think with this statement and with all what we have seen on data this week, now the next big target would be in that area, with a comeback in this level probably by the end of year, if that unfold like I think. Still possible we go up. In this case, we have the 38.2 at 97.052. As I said, I don't really think that would happen. Next level, 97.35, and then the big 61.8 at 97.72. So that's all for DXY now. Then we can look a little bit at Euro USD. So that's where we are now on Euro USD. You see we have that kind of double bottom here, same thing as we did with the DXY. Of course, you have this double bottom there, right on this level that we have been calling so many times, even when we went through it here. We go back on regular candles. So we have this double bottom on the quarterly support and big order block bottom. So it's a very big order block here, this one here. And that's where we are coming each time, as you see, to pump in some momentum. And generally after that, we see an acceleration on the upside. So that's what we have. We still look for a break of this area where we have been consolidating a little bit, and the target would be, if we can see it, of course, we have this first target area here, but the real target would be around 115.20 to 115.45. This is where I would not be surprised to land inside this move if we can see a continuation. We have now the one-to-one extension to break again, which is where we are struggling since a long time. So as I said, we need to see an open close above this level again to see a continuation and break the next level on the upside. My star of my best trade of all of that has been the USDCAD. You know, I've been calling that for a long time on Twitter. So let me grab the chart. We have here this chart. So that's where we are. Just to refresh everybody's mind, if that would be necessary, we have this big monthly impulsive move down, very big one of several thousand pips or something like that. I don't remember, I measure it each time. 2,661 pips on the downside. Now we are inside this correction of that ABC, and I am expecting another leg lower. The target would be 130.47 and then 102.01, let's say around 1.020. So we are not there yet. I was having, as I said in many times, the 38.2 fib here together with a 78.6 upside ABC, which is the inside correction we have after the down leg. So it's this big ABC you see here, okay? And I was expecting we could see a move, a spike up to the 38.2 at 130.20 area together with a 76.40, 78.6 ABC extension. But finally, we stopped a little bit under it. We nearly post exactly the same as we have seen in the other instrument, the DXY or other things like this. We have a kind of double top here, which could be really a very nice top formation. Everybody was expecting a rally of the USD on the end of year after the FOMC, so that would be a perfect turn. Completely on the opposite side of the market, which is a good thing. And we stopped. That's important to show this one too, because yesterday on a daily close basis, we respected, we look at this, we have here the 61.8 extension of that ABC up. Let me put it a little bit thicker so you see it better. So we have touched this 61.8. We spiked a little bit above it on daily, then we came back completely inside and under it, which is very good, really very good. We stopped here to the pip on a 50% inside fib, which is what you can see here. You have all my chart this morning. So as you know, I have for each instrument, when I am really digging inside an instrument, I do several charts. I have 2 or 3 charts always with different things, and I am looking at everything to be as ready as possible for any potential move. So this is my profile, volume profile chart, and you see how well we have respected this level yesterday. I posted it on Twitter anyway, so you can see it there. And inside the chat room here, you see the same thing. We have this double top, and you see how well we have done this double top right on this pink 38.2 inside fib. which is a very nice one, and we are pulling back from it. And we stopped, if we consider the bodies, we stopped right under the 61.8. So as we know, ABCs have two main targets. One is the 61.8, the other one is the one-to-one extension. So we need to confirm, but that is already on the way, that this 61.8 could be the end of that ABC. And in that case, we would be going much lower. As I said, that is the end, that could be the end of the correction inside the big monthly leg down. And then we would go to the level I just mentioned, looking at the next level on the downside, which is what I just showed in the previous chart, which is there. So that's where we would go if we keep this high here, this blue high here. You see this big monthly ABC down, A, B, and boom, the C would be that one. In that case, we are now running for 113, which is great potential, as I have been saying a lot on Twitter and inside our chat room. So from yesterday, it's around 1,600 pips that we could see on the downside as soon as this high is not touched. The other thing I like a lot from the price action point of view is that we barely came to do this double top, as I just explained, but we stayed a little, some pips under it, like 8 or 7 pips under it. And that's usually, that is showing we have here a consolidation, we have here an accumulation of money that has been done in all those moves that you can see. Each time we came here, it looks like smart money has been accumulating a lot of position, and we could see it very well on the volume indicator we have been using. So that's where we are now. The other thing I posted, I come back to this one yesterday, was this this big 200 moving EMA. We had the 200 weekly EMA right there, coming right here, together with the 61.8 and together with this inside level here. So that's what I think I posted it on Twitter too. I know I posted it in the chat rooms, that's for sure. So this is the ABC up. If we fail here, if we stop here, that it can really be the case with this accumulation of money there, then we would drop. The next big level to break is this one here. That's from the volume point of view. So we have here a POC at 2610. So we would need to break through that. If we break this thing here now, now today or in the next day, then we could really see an acceleration on the downside. If we don't, then we will look for 132.30, which is another area, as you can see, where we have some volume, where we had some volume in the past. So on USDCAD, I stay on the short side, of course, because of what I just said, which is this big monthly ABC, sorry, which is the big monthly ABC that we just spoke about.